What's up, traders? Anthony Crudele here. So the market had a little bit of a sell-off last week from the highs of the year, and everyone is wondering, is this sell the rally next week? Is it buy the dip next week? And in today's video, I'm going to explain why I believe that, at least for next week, it's going to be sell the rally, and why I think that the sell-off has legs to the downside. But before I get into my reasons for wanting to be short next week, I want to explain quickly what the E-mini S&P is. That's what we're going to be looking at here on TradingView. That is symbol ES1 exclamation point. This is the futures market for the S&P 500. In my personal opinion, if you're trading the price action for stock indexes, this is the big boy, the main market to watch. I know some of you may be trading SPY, but when you look at futures, there's a lot of advantages to trading futures for day traders. And I do a ton of videos on anthonycrudele.com to explain the advantages of futures. But for today's video, I'm not going to get into that. But what is the E-mini S&P? It is the S&P futures. It's $50 a point. So every time you see the S&P move from, like right now, you see it went out at $13.89, not $13.89, $43.89. And every time it moves from $43.89 to $43.90, a full point, it's $50. Then you have the MES, which is the micro E-mini S&P. And that is 1/10 the size. So for every point move, instead of $50, it's $5. Pretty simple. Also, something I should note here on TradingView, where I do most of my charting, you could connect your broker. I use TradeStation very actively to trade futures, and you can connect that directly to TradingView, which is really awesome. And so if you're a TradeStation user or customer, you can connect it to TradingView. And if you're not, you just go to TradeStation. And I'm sure there's some links somewhere on TradingView that will direct you to TradeStation, where you can open up an account and you can trade right here on TradingView, which I think is pretty cool. Now, let's get into the charts. I'm going to use two indicators for today's video. That's it, just two indicators. And the one indicator that I use, and I've talked about this a lot if you followed me in the past, is a Bollinger Band. And I use a Bollinger Band. I'm not going to use the middle Bollinger Band. I'm going to double click on this just to show you what my inputs are. And it's 20 period, 3 standard deviation. Okay, and actually should be open, high, low, close, 4 there. And that's what I look at. 20 period, 3 standard deviation, Bollinger Band. And pretty simple, right? Just a basic Bollinger Band. The other thing that I am going to add for today's video is Beacon. This is my indicator. I actually created this indicator over 20 years ago. I know it's kind of crazy to think that, but I've been using it for over 20 years. I used to use this when I was trading electronically, actually on the trading floor, looking directly into the S&P 500 pit. So I've been using it for quite a long time. And this is really my number one sentiment indicator. And I will go over how everything works with Beacon today. And Beacon is a free open source code indicator available on my TradingView page. You can go there and get it. And so it's not like it's something I'm selling. It's just you can go and get it. And if you want to read the code and see how it works, go at it. I always love hearing comments on the indicator that I've created. And so what is Beacon? Why am I using Bollinger Bands? Why am I short? So let's talk about that. First thing I want to do is I want to explain some of the basics of Beacon and what I'm looking at when I'm looking at Bollinger Bands. So first off, you will see two red lines, a yellow line, and 2 blue lines. And I'm basically just going to highlight something here. And what I'm going to highlight here with this square is, if you go and look inside this square, which is where those 2 red lines, yellow and 2 blues, have been for really a long time, right? Since September of last year. What that is the peak of this Bollinger Band right here to the left, the top left of the square, and the bottom peak of the Bollinger Band. If you notice, when these lines were drawn, they're drawn from these peaks, from the top peak to the bottom peak. And it's really what it does is boxes out a range. And if you know what a Bollinger Band is, it's really just something that's going to tell you, is volatility expanding or is volatility contracting, right? And so back since September of last year, volatility has contracted from this wide of a Bollinger Band. So obviously back at the end of last year, we had a lot of volatility to the downside. But since then, volatility has shrank. I know some of you will follow the VIX, and you could just tell that we're back in this bull grind mode. But volatility is shrank looking at the Bollinger Bands, and we have not expanded outside of those Bollinger Bands. This is a daily chart, by the way. And so what that means is that we're just boxed in. And that's why I like Bollinger Bands, because it tells me, look we're just boxed into these levels. And so what Beacon does is that Beacon will draw a line on the top and bottom Bollinger Band peaks, and it won't draw another new line until those peaks are taken out. Now the lines inside are going to be 70%, 50%, and 30%. So basically, the red and the blue line are just 30% off of the bottom, 30% of the Bollinger Band range off the bottom, and 30% off the Bollinger Band range off the top. And 50% is simple. It's just 50%. It's the exact middle. It's the halfway back of the Bollinger Bands. So you could use a fib to look at something like this, but these are not Fibonacci numbers. It's 70%, 50%, and 30%, right? Actually, I could just pull a fib retracement and just show you exactly what that looks like. And I actually keep my fibs 70, 50, and 30. So as you see here, as I draw them, here's my 70%, 50%, and 30%. You can see how it's boxed out, those exact numbers on Beacon. And so that's what Beacon does. So what I'm going to do is, let me take my arrows here, and I'm going to delete this. And so what it does is it gives me a range of volatility instead of looking at just price. As you can see here, the market kept backtesting the neutral area for a long period of time. And really up until now, when the market has just started to make a new high, and it took out those previous Bollinger Band peaks, which I was talking about here with this red line. Now Beacon is, as of just Friday's close, because Beacon is going to be drawing lines based upon the close on Friday, because it waits for the daily close. And now what happens is that both the top and the bottom Bollinger Band are pointing in. And so what's interesting is that about Friday's close is that up until Friday's close, we were expanding outside that old volatility range. And I'm actually going to use a replay tool to show you exactly what I mean. Let's go to right here, okay? And then I'm going to hit play on the replay tool and watch this. So when you hit it, you see how the Bollinger Band is expanding outside of that old Bollinger Band range. And there it goes, it keeps going. And bang, Friday on the close, red dots were drawn on the top, yellow, 2 blue dots were drawn. And so what does that tell me? It tells me that we've created a new range of volatility. And so what I think is going to happen now going forward is, let's just move this back. I'm going to close out the replay. And I'm going to take a box. I'm going to draw a box again. So now what I think is setting up is a new range of execution. And what that means is that when the Bollinger Bands are starting to point in, and like this, you're going to see beacon lines here. It means that I think that we're going to probably be stuck in this type of a range for a period of time. Until what happens? Until the market, either the Bollinger Bands take out this peak or this bottom peak. And so for the time being, I feel like we're going to go back down and test this neutral area, this 50% area, which comes in at 43.26.5. So actually, let me take a drawing tool. And let's go to the drawing tool. Actually, I have that on my favorites right here. And I think what you're going to see is, you're going to see scenarios like this where maybe we go up and test the red again, the pink, whatever you want to call it, and eventually come back down to test yellow. And this is the area where 43.26, where it's going to tell us a lot about this current market environment. And when we get down to yellow, because it's really, to me, my pivot, if I start to see daily closes below yellow, if we were to see one like this, then I think we can come down and test blue, which would come in at 42.20. And I know we're a long ways away from that happening, but that's what I'd be looking at. But if we test yellow at 43.26 and the daily closes stay above it, then I think we can go back up and we test pink again, or red, 44.3375. And so my range of execution right now is sell rallies off of 44.3375 down to 43.26. I'll be looking at swing and intraday positions in this because This is just what in the past it's told me. We are most likely boxed in with these Bollinger Bands. And to show you what this looks like previous to, I'm going to show you a scenario that looks very similar to where we are right now to help you really kind of get a guide of why I think that's what will happen. If you go back here, let's see, when was the last time we actually had a new set of lines with a red? I got to go back quite a ways. Oh, actually, that's right. I highlighted it over here. So here's basically what's happened in the past. So actually, I'm going to use a replay tool to show you this because this is actually pretty cool. So first off, you see this is where the Bollinger Band peaks were drawn. It was kind of bumpy here. It's not the cleanest look, but nonetheless, it's a similar look. I'm going to take a replay to right at that box. So we're going to take the replay tool. I'm going to go right here, and I'm going to hit play. So you can see the market's going up, Bollinger Band's pointing up, like I'm opening up. It takes out this previous red peak, right? And then bang. You see right here. This is very, very similar to what we have right now. Volatility expanded out of the previous set of volatility with the Bollinger Bands. You get the one red dot on the daily. You see that? Let me hit play. There's the test of yellow, holding yellow, closes below yellow, closes back above yellow, and just testing yellow, close below yellow, test of blue, right? And so this is what I see happening potentially, right? Because you never know. We have to play the action that's in front of us. Yes, I want to exit that right back to here, and which is why I go back and I draw this. And this is, like I said, those are the scenarios that you're looking at. And which is why yellow will become extremely important in the coming days, because if we continue to hit yellow, test it, a lot of times you'll see one day close below it, one day back close above it. Be very careful on being too much of a bias with that. But if you start to see that it can't get above it or it holds above it, it could mean that we go back up to here and we just stay in these ranges until what happens. And so, well, the only way that I would change my mind about this, because for me, the number one thing is, well, where would I be wrong, is if we were to start to see the Bollinger Bands shift. Let's go back to this. Let's just say the Bollinger Bands did something like this, and then all of a sudden took out that peak, took out that red, and the bottom went like this, right? That would mean that where market is going to potentially it's either expanding higher again, or we're expanding much lower, right? And then I would wait for, once again, a scenario for the Bollinger Bands to come back in again and give us a new set of Bollinger Bands. And that's what I look for. And this is a great tool that really helps me determine what side of the market that I want to be on. It doesn't make me think too much. Right now, I know I want to sell rallies until I see a test of 43.26.5. A daily close above 44.33.75. I'd start rethinking it because the bulls are proving that they could hold above my red line. But until that happens, I think a test of 43.26.5 in the E-mini S&P is imminent. So hopefully this helped you really just get an inside look of a strategy that I have been using for decades now. It's hard to believe. And that's what I'll be looking at. So I'm bias short until a test of 43.26.5. That does it for me today, everybody. Have a great weekend. Trade well.